Nvidia reports fourth quarter earnings after the closing bell on Wednesday, February 26th. Catalyst co-host Madison Mills joins us now for a look at the four things that she's watching. Hey, Maddie.
Hey, Brad, that's right. We're watching supply and demand dynamics, any color on policy impact from export controls to tariffs, and forward guidance, which could include comments on the Blackwell chip and DeepSeek competition. So let's break these down. Starting it off with supply versus demand. We've seen Microsoft, Google, and Amazon missing on revenue expectations in part due to lack of supply. They didn't have the capacity to meet strong customer demand. Will the same be true for Nvidia? The street is looking for nearly $40 billion in revenue. That number would be hard for Nvidia to hit if they can't meet customer demand for the quarter. Next up, you're looking at dynamics with China and export controls. The Biden administration had already restricted Nvidia's AI chips from being sold to China. The Trump administration has signaled an interest in furthering those export controls in order to boost domestic chips production, especially after DeepSeek said that they had used Nvidia's chips to train their cheaper AI model. Another policy to watch here, tariffs on chips. President Trump had teased out a potential 25% tariffs on chips this week. That could be a problem for Nvidia because the company obviously dominates in AI, but there are lower cost alternatives. So if tariffs increase the cost of Nvidia chips, they have a choice. Customers, would they pay up or would Nvidia eat those costs? And if they do, that could put pressure on their profit margins. Lastly, we're looking at forward guidance and the success of Blackwell. Investors want to know when Nvidia's next-gen Blackwell chips will take over as the dominant driver of revenue in their data center business, because that could drive guidance higher due to the high cost of Blackwell chips. And that guidance could also include commentary on that DeepSeek competition, that DeepSeek market drop that happened just before the other big tech earnings. Nvidia has had a lot more time to prepare a thesis around that than the other big tech names. So will we get that thesis around DeepSeek? That'll be a big question, and we will see answers to hopefully all of these on February 26th.
Joining us now, we want to bring in David Boole. He's the BayCrest Managing Director, Equity Derivatives. David, it's great to talk to you again. So talk to me just about the size of this reaction. What should we be expecting?
Well, like you said, options are expecting about a 7% move, which is a little bit less than what options have expected in previous earnings reports over the last 2 years. And exactly, I'm wondering aloud if this singular report, which used to be a massive focus for the market, just matters a little bit less than it used to. Now, I'm looking back at the last 3 times Nvidia reported earnings. QQQ, the NASDAQ ETF, was about flat that day. If you go back to the end of 2023, early 2024, Qs were up or down 2% 3 out of the 4 times that Nvidia reported those times. Lately, it just hasn't been driving the overall market action as much as it used to. And then specifically for Nvidia, this 7% implied move is a lot. That's like $240 billion of market cap that are expected to be created or destroyed. But Nvidia is such a overall volatile stock that's only about double or 2.5 times as much as it's supposed to move on a normal trading day. So it's a big event, but I'm starting to think that it might not be a one-day surge like it used to if you go back 1.5, 2 years, but it might really set the stage for what the next month is going to look at. So I'm looking at this as a 1 month event, essentially, not really just the one-day jump move this time around.
And so with that in mind, what do you think is the core driver of that move here? Is it demand? Is it ultimately saying, you know what, DeepSeek's not an issue and we're still a beneficiary, even if DeepSeek or other language learning models out there are successful? What is it from your analysis?
To me, the setup, it coincides with what I just said. Maybe it's more of a muted reaction because we already tested the low on this DeepSeek news. We had the dress rehearsal about a month ago or 3 weeks ago, where we saw what happens if the stock goes down 17%. Well, we saw the dip buyers stepped in size. There were some put buyers that came in to hedge those positions, but anybody that was feeling a little bit wishy-washy about potential gains they're sitting on in the Nvidia stock, they had the chance to hit bids on that day that moved lower, and then new buyers stepped in. So the setup I'm seeing from clients is that it's certainly less overowned than it was over the last 2 years. The numbers are likely to be pretty strong, but how good could it be with, the rest of their major customers already reporting big CapEx numbers? I think the sense is, what can they say that's going to really drive Nvidia up another 20% in one day? But if anything, this could be an overhang removed, and the stock could then grind higher over the next couple weeks or a month.
Joining us now, we want to bring in Francisco Obito. He's FM Investments Senior Portfolio Manager. Francisco, it's great to have you ahead of these highly anticipated results that we'll be getting from Nvidia next week. I'm curious, what's the number one thing you'll be watching for?
Well, thanks for having me. I'll be paying lots of attention to the demand for the new Blackwell chips. That's one thing. And I'm also interested in see if they're willing to discuss how foreign governments of the U.S. government is going to increase their spending in AI, if they have any hints where how that's going.
Do you anticipate that commentary being clouded by the DeepSeek of it all? I've wondered, because DeepSeek happened so close to some of the other big tech earnings, if Nvidia might have had a little bit more time to cook on a thesis in response to DeepSeek.
Well, it's not so much about DeepSeek, I believe, in my opinion. DeepSeek is basically a good thing for the AI industry. It's a way of making it widely available to many other potential users. And if anything, it just widens the ecosystem and accelerates the early adoption of AI. So it's a good thing. And I think what people fail to understand is that this is actually a good thing for NVIDIA as well, because the models are not done when you train them. You really got to refine them afterwards. There's post-training that happens afterwards. And you still need the big chips.
Francisco, what do you think the volatility is going to potentially look like?
It's going to be pretty wicked this year. And the reason for that is that it's not only, the normal market volatility. You got to add about the uncertainty brought in by maybe tariff policies and those things, and some of that can be pretty disruptive. So we'll see where that goes. And at the very least, I'm expecting some volatility to come out of it.
I mean, it can be disruptive, but we don't have a lot of clarity on those tariffs. Like right now, the only tariffs that are actually in place is the 10% one on China and the 25% on steel and aluminum. Obviously, the deadlines are upcoming for the others, including sector-specific ones like chips. But how much can the market really react to that known unknown at this point?
Well, it's not so much whether they get implemented or not. It's just the threat of having them. That forces the people on the other side, or the countries on the other side, to think about diversification regardless of whether they get implemented or not. So the impact is there, and the uncertainty that it creates is there already. It doesn't have to wait until they're implemented.
NVIDIA's fourth quarter earnings are on deck, but the results may not be as important as they've been in the past. Yahoo Finance's Julie Hyman is here now with a closer look at what they mean for the broader market. Hey, Julie.
Hey, Brad, thank you. Well, part of this is just because of the action that we have seen this year thus far, where the contribution of the Magnificent Seven, including Nvidia, has really fallen relative to the rest of the market. That's in part because of underperformance of those names, and in part because of the broadening of the types of stocks that are doing better. This long-awaited broadening that a lot of investors have been calling for a while. So Yahoo Finance crunched the numbers. This is as of Wednesday's close, so we might have seen some tweaking since then, in terms of the biggest contributors to the rally this year in terms of the market cap gains. Now, last year, it was Nvidia unquestionably, and all of the others were members of the Magnificent Seven: Apple, Amazon, Meta, Alphabet. In terms of their size and the magnitude of the gains, they contributed the most to the S&P 500's gains. In fact, for the Magnificent Seven all together collectively contributed more than 50% of the gains for the S&P 500 last year. This year, it's a very different story. Yes, Meta's still number one at around 13%. Nvidia's at number two. We'll get to its percentage in a moment. But then you got Walmart at number three. You got JP Morgan Chase at number four. Eli Lilly is on the top 10 as well. So it is a more diverse, beyond big tech list of stocks that's doing well. For Nvidia specifically, last year it accounted for 20%, just Nvidia alone, of the gains in the S&P 500. This year it's a little more than 5%. So it's not that Nvidia is not important, it's just on a relative basis it's less important. Just another way to slice and dice this, to look at the broadening trend that we have seen, is to look at the S&P 500 year to date, which is market cap weighted. That is, companies like Nvidia and Apple have a bigger weighting, a bigger influence. And then if you equal weight it and look at the year to date, it's pretty much neck and neck. There was a big gap between these two last year. So just again, gives you an idea of the closing of that gap that we've seen. So that's part of it. And then part of it is also just that NVIDIA is not wowing us quite to the same extent than it was when it first began wowing us as it was first catching fire with the demand for generative AI chips, right? So if you look at the company's revenue trajectory, really started taking off in 2023 in its reports then, and we were seeing triple-digit gains. The revenue gains, by the way, peaking right around 260% here. And that was, if you look at the quarter when that happened, that would have been its fourth quarter of 2024, fiscal fourth quarter of 2024. It's on a bit of a different calendar. Now, the estimate when it's coming out with its numbers next week is for revenue of $38.26 billion. That's still a 73% gain. It's all relative, right? It's still a 73% gain, which is a big gain. It's just not sort of the heady, huge triple-digit gains that we had seen from NVIDIA in the past. And, you know, we did see NVIDIA fall a couple of quarters ago when it reported. Last quarter, the stock was a little changed. So we'll see what kind of halo and ripple effect it has this time around. Again, it's not that NVIDIA isn't important. It's just that it has become less important as we get this broadening. And then finally, just want to take a look at the stock action in NVIDIA, if we could get it to come up. The stock action in NVIDIA that we have seen year to date here. So here's NVIDIA. The stock is up about 3.3% year to date here. Here's today's action. You know, so it is higher year to date, but its record high was back on January 6th, and it has not reattained it since that date. So again, just something to put things in perspective as we await those earnings after the close next Wednesday, Brad.
I've got my kitchen timer set. It's on the max numbers that I can put it on for that countdown. Thanks so much, Julie.